What's good, YouTube? Welcome back to the channel, guys. Coming at you here with an important lesson. This video is not to be missed, guys. Smash that like button, save it, download the video if you have to, because you're gonna need to go back over it eventually when you're trading, and maybe use it as a reminder. So we're gonna talk about how to deal with a loss, exactly how to approach losses in the stock market, guys. And because trading is psychological and emotional, you're gonna have to have a mindset made up towards these losses and treating them like a business. So here's the thing, guys. Every trader will hit a wall eventually in their trading career. It's a wall it's a universal wall. Everybody will hit it. Every trader, especially those who are new to the stock market, where they're making money consistently using a framework, a strategy, maybe a week, 2 weeks, 3 weeks profitable. They grow their account maybe, let's say, to 10,000. And instantly 1 week they wipe half of it. They give back half of that profit to the stock market after taking several losses. And then the confidence drops. Because every trade that you make, it's gonna give you a confidence boost. Matter of fact, boost. Your whole kind of career is gonna be based on confidence. So when you lack confidence after making several losses, you're gonna be scared to pull the trigger. Your vision is gonna be clouded and you're not gonna know what's going on in the stock market. So, how should we approach trading, guys? And how do we break through this wall? So, let's go over this a little kind of framework that I'm going to show you. And look, trading is a game of probability. You got to understand that, which means that if you learn a strategy or framework, 80-90% of the time, you will find success, even 70% maybe. Success in the stock market. So, you'll have successful trades. And your confidence will start to be built up. And because you're so used to making profits, you weren't prepared for the losses. So you forget about it. Subconsciously, you don't even want to think about the losses. So you're not preparing for it. So what happens is, guys, you end up having huge losses, even bigger losses than your profits, wiping out those profits. And that's discouraging. Going through 3 weeks of wins and then giving it back in 1 week. That's very discouraging and time wasting. So you don't want to be doing that. So here's the first phase for many traders, guys. It's the beginner phase. And really the beginner phase is a 50-50 thing, where you're making money here and there, right? And then losing money here and there. And that's assuming you haven't got any mentorship or whatnot, because if you do get mentorship, usually you go to 6-12 months. It accelerates your learning. Because then you get patterns and whatnot, behaviors that occur. And 6-12 months, this is really what you should be expecting, right? But doesn't mean you're going to be profitable. Maybe you'll be break even. Maybe you'll be profitable if you really adapt what I'm going to say here and put it into your trading. 6-12 months period, the profits here are going to be very small, if even. Now, 6-12 months is just kind of realistically speaking. It can be 3 months where you start seeing growth and profits. It could be a month where you start seeing growth and profits. It all depends, guys, on how good you are and how fast of a learner you become. So here, 6 to 12 months of experience, guys. You get to see more greens than reds. And the 1 year to 4 year, really that's when you start seeing consistent profits. Because here's what you're doing. What you're doing is you're actually looking at trading like a game of probabilities, and you're saying to yourself, I've got 80% success rate, and you're gonna have to prove the theory for yourself, right? Whatever theory you're learning, whatever mentor you have, you're gonna have to prove it for yourself that you actually do get 80-90% success rate. Now, because you are consistent and you've been profitable, let's say in those last 3 weeks, you forget about the potential loss that can occur, because no trader has 100% success rate. Right? Now, sure enough, doesn't mean you're going to make a loss in a month. Some traders go for a whole month, 2 months on a winning streak without any losses. And that's good, but also it's bad because they get so confident that they forget about the potential loss that could occur. So their risk management is non-existent in their trading strategy. And that's something to be aware of. So because trading is a game of probabilities, guys, we need to have an aim for at least the same percentage when we're taking profits. So if I want to take a 2% profit on the day, then I'm going to have to be willing to take a 2% loss. Just because when we move on to this next screenshot or this next kind of theory, we want to have week 1 as a realistic week, not week 2. So week 1 is Monday I make a profit, Tuesday I make a profit, Wednesday I make a loss, 200, which wipes out Tuesday's profit, but I'm still profitable on Monday. Then Thursday I come in with 200 profit, and Friday again with another profit. And that gives me $600, euros or pounds for the week. That's good, right? I manage my risk by having a 1-to-1 risk reward ratio. So on week 2, however, right, I take a 2% profit on Tuesday, but I take a 3% loss or so on Wednesday, or 4% or 6% loss on Wednesday, and that gives me 0 for the whole week. Now that's not what you want to do, guys, when trading. So how do you deal with a loss? Well, risk management is important. That's very common, risk management. And look at the loss, because it's emotional when you do take a loss. Look at the loss like an expense to running the business. A restaurant, or I guess any other business out there will have these expenses in order to operate. Well, as a trader, the only expense that we have here, other than commission for the brokers, is a red day, right? So it's okay to take a loss as long as it's with our kind of risk management boundaries. So if we go for, let's say, 3 days here, guys, losses, and we wipe out all the profits that we've made in the last 2-3 weeks, well, we're gonna go from this overconfident trader to now this scaredy cat that can't pull the trigger on the day. So what happens here is, well, I'm gonna make wrong decisions, and sometimes you fall into the category of revenge trading because all you wanna do is go back and recover the loss, and you forget about your whole strategy, your whole game plan. And all you want to do is recover a loss. Sometimes you make a profit, you say that's not enough to recover a loss. So you stay in the trade, and instantly it goes against you because you're too greedy, because you're so focused on taking that loss that you lost and recovering it. You forget about taking the profit, and it goes in the red, and the cycle continues. It's a vicious cycle because it plays with your emotions. So as long as you understand that concept, guys, trading losses is the expense to running the business, as long as it's within the boundaries of our risk management. And our risk management, especially on this channel, is 2%. That's what we aim for on the day as a profit, and that's what we aim for as a loss. And with time, your risk management will get better, because the less trades or the less time you spend in a trade, the better your entry, the less risk you will carry. So if I'm waiting for the pullback and I enter right at the top in the short position, I'm carrying less risk when I'm shorting, because I'm shorting when the pullback is happening and when the resistance has hit, and there's no chance for this stock to come back to my entry point anytime soon, and I'm writing it down. So I'm carrying less risk here in this trade. So again, guys, what we should be aiming for is having a 1-to-1 risk ratio. So now you are that person in week 2 that's taking consistent losses, and instantly you start doubting your whole existence. You doubt everything you know, and you forget about the time you were successful in the last couple of weeks, the way you grew your account in the last couple of weeks. You're gonna say to yourself, is this beginner's luck, or was this beginner's luck? Is my trading strategy not working? Am I a bad trader? No. It just means market direction changed, and it just means you got too cocky, too confident, and you forgot about the risk management. And most importantly, you forgot that this is a game of probability, where if we have 10 trades, 8 of them will be profitable, 2 of them will be in a loss, especially when we have an edge over the stock market. And you forgot about your risk management, and you let your trade run, right? When you're at a loss, thinking that it was coming back, just because last trade done the same thing and it came back in your favor. But does that mean this trade that's running against me is gonna come back down in my favor again? No. No. Right? Maybe one time it came back in your favor and it worked out for you by waiting even more. This time you wiped out 10-20% of your account because this trade kept going without you even taking the loss. You thinking that it will come back down like the last trade. Again, all of this will come with time and experience, guys. So with time and experience, you'll end up being this person here. 1 year to 4 years, where you're actually making good profits, and even a loss is not gonna make a difference in your portfolio because you'll get it back. And I know it's emotional, I know it's psychological seeing a loss in your account, but you gotta deal with it. You gotta think of it like a business. This is the expense of running this business called trading. Okay? Now, as a beginner, you're probably here in the 50-50 stage. If you get mentorship, you jump at this 6-12 months experience. It's good, but it's also bad because you haven't felt those losses, because you're just making profits. And then when you take a loss, you don't know how to act, you know. So, yeah, 1 year to 4 years is really the expected outcome should look like this. Now, for many people, it might take them more years to get to that level, but I'm just assuming you guys are following my trading strategy. That's what I mean. If you're not, there's some trading strategies that don't work, and you know, when you're trading, you're really just trading this 50-50 chance all the time, because you don't have an edge over the market. You're just playing around, beating around the bush, and yeah, you're not really thinking of it like a game of probabilities here. Okay, there is no edge in some trading strategies. So anyways, hopefully guys you enjoyed this video. Hopefully this video made sense to you. Look at it like, I guess, a game of probability, but also a snakes and ladders game. If you do take a loss eventually after making a lot of profits, you know, you go up, you take a bite, then you come back down, and then you just go again. I know your confidence dropped, but the way to get back that confidence is by managing position size, dropping position size, and trading again just like you were doing. Don't change a single thing, but maybe just tweak a few things, such as entry point. Maybe be more patient with your entry. Don't jump the gun on market open. Have good risk management. Wait for the resistance. Wait for the stock to consolidate. That will lower your risk, because you're getting in right at the top instead of just diving in because you're afraid of missing out. So again, this video hopefully will help, guys. Appreciate you for watching. Let me know in the comment section. Smash that like button. Let me know if this video is helping your trading. You might need it in the future because you're gonna have to go back over it just to give you that confidence. And yeah, peace and love, guys. Just like always, follow me on Instagram, and I'll see you for more just like always. Peace.